One thing that's important just as a precursor is Bitcoin itself is very limited in its capabilities. And that's also some of the beauty of Bitcoin. So it's quite slow. Has very limited programmability. It's quite expensive to transact. And all of those things make it amazing for settlement. But it doesn't make it amazing for smart contracts or DeFi. It has these very severe limitations. So you have these push-pulls, these trade-offs in any system. So what Bitcoin is primarily missing is two components. One is it's missing a yield source, right? And that's where Core staking comes into play. And then it's also missing an execution environment. And that's where Core's EVM ecosystem is on display.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by WAGMI Ventures or any of its affiliates to buy or sell any securities.
Hey, WAGMI family. Vega here with another WAGMI Ventures podcast episode. Today I'm chatting with Rich Rines. Rich is an initial contributor of CoreDAO, someone I respect in the Bitcoin BTCfi space, but Bitcoin just generally. CoreDAO is the leading Bitcoin ecosystem enabling the first implementation of non-custodial Bitcoin staking. It is also designed to scale and enhance Bitcoin's utility in the decentralized finance space. For anyone who is new, this is the WAGMI Ventures podcast where we do snapshots with interesting builders, founders, and innovators across crypto and AI. Check out wagmiventures.io to learn more about the syndicate behind the podcast. Let's get into it with my buddy Rich. Rich, thanks and welcome for coming to the show.
Awesome to be here, Benga. Excited to chat today.
Fantastic. Let's get into your story and how you jumped into the crypto space.
I first heard about crypto back in 2011, I believe, as part of a directed readings class in college. It was all about computer security. And the professor introduced this Byzantine generals problem and how this guy, Satoshi Nakamoto, or a group of people, Satoshi Nakamoto, had solved this really difficult and elusive computer science problem. And at the time, I totally didn't understand it. I was like, there's money in the computer. Like, I didn't really get the pitch. And then as I was coming out of college in 2013, I reread the Bitcoin white paper and it clicked. And that was the first time that I had heard really we're going to reinvent the financial system. We're going to create a non-sovereign store of value with these really big, ambitious, audacious goals. And that was something that really clicked for me. In college, I studied economics and essentially databases. If you think about what crypto is, those are the two kind of key components. So it was a match made in heaven from day one. And I got really involved and really excited about Bitcoin from 2013 onwards. And I first heard about Ethereum, I think in like late 2014, early 2015. And that was the first time, and they were going by this world computer analogy at the time. And that was kind of the second phase of my understanding. It was, okay, so we have this better money, this perfect collateral asset, but now we can make it programmable, right? Like you can do things more than just send it or like fairly primitive smart contracts with time locks and other pieces. And that was about the moment where I started to be able to see the future for the first time. And then by the 2017 cycle, I was fairly convinced this is what I wanted to spend the next several decades of my career on. I found myself at Coinbase for about 4 years leading money movements engineering, moved $1 trillion, had a lot of fun, worked with a lot of great people. But during that period, I think that was part of a larger macro shift as part of the crypto community where so many projects had started to transition away from decentralization more for performance. And a lot of amazing projects were built during that time. But in my mind, decentralization is so critical to what crypto is and the value proposition that it brings to now hundreds of millions, but hopefully billions of people in the world in the next few years. And we did a first principles exercise to say, okay, what is crypto missing? And it was, okay, we need to go back to our roots. We need to start to scale decentralization. How do you do that? You go scale Bitcoin. And as I was transitioning out of my time at Coinbase, it was going back to my first love of Bitcoin. And then that is what became Core over time.
Wow, that's fascinating. For me, I think it's really cool. Your title at Coinbase, head of money movement engineering, and as someone who transitioned from that role to being an initial contributor in CoreDAO, like what was that pivotal realization that drove you to focus on Coin's scalability challenges?
So I've been an entrepreneur since I was 18. That was actually when I founded my first business, actually with one of the other initial contributors at Core, actually. We have business partnership for a long time. But as part of that, I've always been more of a small company type person. Very much eat what you kill, really focus on every day. You go out there, you solve these really difficult challenges. You try to push the ball forward. You ultimately try to make your dent in the universe. And when I was early at Coinbase, I really enjoyed so much of the work that we were doing there. And we got to move huge volumes of money. We got to chase bad guys, build really interesting systems. It was really quite a bit of fun. But when Coinbase went from hundreds of people to thousands of people, that's where all of a sudden things started to change for me. That just, I can't have the same amount of impact in that sort of environment. For other people, that's where they thrive, right? Like that is their happy place. And there's so many people out in Silicon Valley that really enjoy scaling companies like that. But I'm just so much more of a 0 to 1 person. And I was very fortunate during my time at Coinbase to be given a lot of freedom. And it's one of the things that I think there's been so many amazing founders that have come out of Coinbase because it creates a culture that really emphasizes experimentation. And it really emphasizes people trying to solve big challenges. Coinbase's mission was always increase financial freedom in the world. I don't know how many bigger goals there are that exist of any company out there. And as I was doing kind of my own realization of what was next for me, it was, all right, I have to go back to what I'm good at, 0 to 1. I have to go back to what I'm passionate about. And what I'm really passionate about is Bitcoin. And the kind of next wave was, okay, what could I see myself spending the next 10 plus years on? And there wasn't really a lot of other options besides Bitcoin, something that gets me uniquely motivated. And the other piece was, I think Bitcoin had fallen into a bit of a stagnation. So really coming out of the 2017 cycle with Bitcoin and the block size wars, I think a lot of Bitcoin was lost. Yes, we got the SegWit upgrade. Yes, we got Taproot. Like we got some major upgrades to the protocol that still happened afterwards. But Bitcoin wasn't a really exciting place for developers for a long time. And I feared that if Bitcoin fully stagnates, we're not going to be able to realize that full vision, because I would argue that when we go back to 2009, Satoshi wanted to build a better money, wanted to build a totally different financial system. And I think if you look in 2025, we've pretty much failed at that today. But what we did is we created a store of value, this incredible nation state level collateral asset that blew away everyone's expectation. That's a huge amount of success. But we had these other use cases that Bitcoin itself just couldn't support. And that was a realization that we came to, I think, before quite a few others did, as Core actually launched a mainnet in early 2023, and ordinals didn't even happen until after that, which is like this new Bitcoin boom kind of came out of that. But we were just so focused on actually realizing this value and hopefully getting Bitcoin in the hands of maybe billions of people around the world one day. So it was this big mission, something that we could really sink our teeth into, and something that we think that the world needed to see and that Bitcoin needed to see.
Wow. I love the way you kind of dig right into understanding, like, it's not just about Bitcoin as a store of value, but the other things that we can absolutely bring, or at least discover utility for coin. And you mentioned that it's helping to really bring about Satoshi's vision for what Bitcoin is, which kind of goes to the core of what CoreDAO is as well. And I'm going to let you just educate us and the audience here about what CoreDAO is. And if you could also touch specifically on the Satoshi Plus consensus of CoreDAO, and maybe one of the most misunderstood aspects of this mechanism, because I think it's really powerful, and just hearing it directly from you would really help a lot of folks out there to understand how you guys are approaching it.
One thing that's important just as a precursor is Bitcoin itself is very limited in its capabilities, and that's also some of the beauty of Bitcoin. So it's quite slow, has very limited programmability, it's quite expensive to transact, and all of those things make it amazing for settlement. But it doesn't make it amazing for smart contracts or DeFi. It has these very severe limitations. So you have these push-pulls, these trade-offs in any system. So what Bitcoin is primarily missing is two components. One is it's missing a yield source, right? And that's where Core staking comes into play. And then it's also missing an execution environment. And that's where Core's EVM ecosystem is on display. But by adding those two utilities to Bitcoin, you can fully unlock that latent capital base that's there. So Core is both the leading Bitcoin ecosystem and then the leading Bitcoin yield solution. And they feed each other reflexively. So more and more usage on the network increases the staking yield, more demand on the staking side increases the value proposition of getting involved in the ecosystem as a builder. And it's all about creating these flywheels and these loops. And it's so important to design a token economic system, in our case, that's symbiotic with Bitcoin, because ultimately we're trying to have a very special relationship with the L1. We want to be adding utility to Bitcoin miners, Bitcoin holders, Bitcoin stakers, because the more and more we can blend the core and the Bitcoin community, the bigger impact that we can have. And if we zoom in on Core's consensus mechanism, it's a novel consensus mechanism called Satoshi Plus. And it has three ingredients. It has core staking, and there's about 200 million core that's currently staked. It has Bitcoin staking, and there's about 7,000 Bitcoin that's currently staked. And then there's miner hash delegation or delegated proof of work. And there's about 75% of the Bitcoin hash rate that's currently securing the core chain. So in a non-technical summary, you've got three ingredients that are in your consensus soup. And to get elected as a validator, to get the right to produce blocks, you have to get these three hard to get ingredients. But that's how you get elected into the validator set and you participate in consensus. And as a delegator, you can bring any three of these ingredients and receive rewards from Core's consensus mechanism and transaction fees on the network for doing so. So you can think about it similar to an existing proof of stake system, but instead of just rewarding the existing token holders, we reward all three of these different ingredients. If you look at the Bitcoin hash delegation, or if you look at the Bitcoin staking, those take place purely on Bitcoin. And that's very important because we want all of that to be fully auditable, verifiable on your favorite Bitcoin block explorer. And then that data gets trustlessly relayed over to the core system. And that's how we calculate these different voting powers to use proof of stake terms to elect that validator set. So I'm happy to double click and zoom in on any of the different components or to talk more about the EVM ecosystem.
Hey, everybody. Quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Let's get back to the show.
Yeah, thanks for breaking that down, Rich. I think it's pretty clear in how you lay it all together. Might be you've already cleared to a number of folks, but is there any common misunderstanding or in how the three components of the consensus come together that you address or hear from folks on a regular basis?
One of the more common things that gets brought up is Bitcoin's proof of work. Bitcoin has no native yield. And that is true by default. That's exactly why you need a solution like Core in order to go help give Bitcoin yield. And you might ask yourself, why does Bitcoin need yield? And the idea is that Bitcoin itself holding it is negative carry. So if you're using Bitcoin to post this collateral, which is the dominant use case, you're foregoing having some sort of yield-bearing nature to it. And that is atypical for most things, right? Most assets wind up being positive carry. And that has very positive impacts in terms of the different use cases with which you can use these assets. And a kind of crypto native example of that is think about the explosion of Ethereum DeFi after proof of stake, right? You wouldn't get things like restaking, you wouldn't get LFSTs, like so many primitives only became possible when you got a yield bearing Ethereum. And Bitcoin should be no different. So we walk people through how our mechanism works. And how our mechanism works is you use a Bitcoin native opcode called check lock time verified. It's been in Bitcoin since 2015, so it's very battle hardened. And the idea is you time lock the Bitcoin to yourself, so you can't spend that Bitcoin for some period, and it's configurable to a minimum of a day. But by locking that up and encumbering it, it remains fully in your wallet, so there's no principal risk. But that allows us to factor it into our consensus because you're ostensibly doing the same thing that you're doing in normal proof of stake when you lock up funds in the validator. This is the closest thing that you can do in the Bitcoin network to achieve the same thing. But by helping to secure the core chain, you now have those block rewards, the transaction fees that get passed back to you as a Bitcoin staker. And you can do this in your favorite wallet today. And the idea is now this is unlocked so many different use cases, whether they're Bitcoin LSTs in kind of the more DeFi land, or even some interesting TradFi use cases. So last year, it's about a year old now, we actually created the first yield-bearing Bitcoin ETP with Valo. So now you can actually get exposure to yield-bearing Bitcoin in these TradFi wrappers. But this is just the very beginning. Like, one of the most exciting things about what I do is that I get to, again, help create the future. And what I've seen is there's both the retail DeFi angle, and then there's also the more traditional finance angle. In Bitcoin, is the most interesting thing to happen to traditional finance since the derivatives boom in the 80s and 90s. Because now that we have a native yield solution, you've been unlocked Bitcoin structured products, you have Bitcoin ETFs, Bitcoin derivatives. This is going to be a $10 trillion space in the next decade or two. And that's such an exciting opportunity, but it all comes about from these new primitives. So that was why it was such an important component. And we like to walk people through these building blocks, step by step, have people tear apart the mechanism, because ultimately we want people to get comfortable with it. Because anyone that's been in the crypto space long enough can tell you, if you don't understand what you're getting involved with, what the risks are, or where the yield comes from, you're probably doing something that you shouldn't actually be doing. So I can be super transparent above board, and that's one of the reasons we'll be able to scale this product so successfully today. And we have such an interesting audience of small retail participants all the way to very large funds and institutions.
Yeah, I love the fact that you talk about the different use cases, both across retail and institutional. We recently saw you guys partner with Maple Finance and a few custodians to unlock another use case for Bitcoin. Can you tell us more about that?
The Maple partnership, in conjunction with BitGo, Hex Trust, and Copper, is one of the most exciting things that I think Core has done to date. And we're super, super excited about it. There's already 1,200 Bitcoin that's in this first version of it with no LST, but the LST will be coming shortly afterwards. But there's already a ton of demand, which is great. So to explain what this partnership is all about is in Core's mechanism that I just described around staking, if you just stake Bitcoin, you get a rate that more or less covers your AUC fees at a custodian. Let's call it 10 to 30 bips on average, can go higher, can go lower, but that's roughly where it goes if you just stake Bitcoin. But if you stake Core and Bitcoin, you can earn north of 500 bips. And that's a very big difference. It's multiplicatively different. And Core actually created the first idea of these nonlinear staking yields. And we had to create it out of this balancing mechanism between a $2 trillion asset like Bitcoin and a $1 billion asset like Core, right? You have to create these solutions to blend these and make the math work in a sustainable fashion. But that's always led to this question for those that want to go stake both of these. They have to figure out how to acquire either the Bitcoin or the Core. And that can be difficult for a variety of reasons. So the partnership with Maple is you bring in Bitcoin, they handle getting the Core, and they also handle hedging out some of the risk. And by doing that, they wrap up this dual staking trade in the form of what will be an LST. So now you have this yield-bearing Bitcoin that's putting out about 5% as of this call, and you can now go bring that with you, whether you're going to do a lending agreement, you're going to go put it in DeFi and loop it, or you're going to go post it on an exchange to go do call overriding, you name it. But now you can go bring this yield with you. You don't have to pick, I can get staking yield or I can go get an LST. You can now, or I can just bring my Bitcoin in DeFi. Now you get this LST that gives you the best of all worlds and it's high yield. And the demand has been nothing short of incredible thus far from institutions across the globe. And I think it will become quickly one of Core and Maple's most successful products because the product market fit is so clear. People want to use Bitcoin as a collateral asset. They want to do that in a variety of different use cases, and they want it to be positive carry. We couldn't be any more excited about it. Maple's a great partner, as are the custodians.
Phenomenal. I definitely think that this is one area that you absolutely lead all the BTCfi products in. And we've seen CoreDAO being described as the largest Bitcoin ecosystem in EVM with over $1 billion in TVL. Outside of the Maple use case application, are there any other decentralized applications on Core that you're excited about?
Too many, I think, is the short answer. So I view this LST as similar to the STETH comparison in Ethereum, where STETH became the dominant asset in many ecosystems and unlocked so many interesting use cases. And I think LST-BTC, which is the name of the product with Maple, will be very similar for the Core ecosystem. And if I was to describe Core ecosystem today, it's a little different than most others. So one, the TVL is by and far Bitcoin. right? And that's one of the ways that Core can have real APYs on Bitcoin and have real utility for Bitcoin beyond just the 0.1% that you get in WBTC on Aave, which is a classic example that most people reference. If your ecosystem is Bitcoin denominated, majority of your volumes in Bitcoin, you naturally can have higher yields. And we have many of the interesting primitives that have now hit scale for over the last year or so, where you have like our native borrow lend, the native dexes, all of that is really taking shape and it's really starting to grow. And the next wave is going to be your second level building blocks, if you will, like perps, stable swaps. So there's so many other things that still aren't fully at scale yet. And that's what I think a lot of 2025 will be, is we'll be growing into one of the leading ecosystems overall versus just being the biggest coin ecosystem. I also think Core is very true to our nature of trying to get to product market fit for many different use cases. We have a very different approach to building the ecosystem. So we try to partner with long-term builders that want to call Core home. They're probably not multi-chain focused. They want to build a real business. And that's what really gets them out of bed every day, not just grant shopping from chain to chain. And part of that is identifying use cases where you can go be a winner. You can have outsized impact. So one of the ones that or maybe a couple of the ones that I'm super excited about, one is called Nawa Finance. Nawa Finance is going to be the first Sharia compliant DeFi protocol for Bitcoin. They've got an amazing team behind them. There's going to be some pretty sizable TVL that will all go live from day one. And it solves a real problem because so much of the existing Islamic world hasn't been able to participate in DeFi at all. And we care a lot about trying to solve real problems for real people. And that's a little bit of our edge, but you have to partner with amazing builders to go do that. Another one that I'm really excited about is called Bits. Bits is, you can think about it as basis trading for Bitcoin, covered call strategies for Bitcoin, all wrapped up in a token. And the idea being you can now have real cash yield that scales incredibly well. And that will also come to Core soon. So there's about 10 others behind those, but I'm really excited about the existing projects and watching them continue to scale up and grow. And then also watching some of these new projects come to life and take shape.
Thinking about like the practical challenges is a number of these use cases like come on board within the Core ecosystem, and with Bitcoin DeFi and dual staking gaining traction, what would you say has been the biggest hurdle for making Bitcoin a seamless part of financial products? And the projects you mentioned, like stablecoin lending, I personally think being able to provide a product that allows the Islamic world and folks, the Islamic finance, if you will, to engage more in Bitcoin is pretty interesting. But yeah, I would like to get your thoughts around where you think some of the hurdles are and how CoreDAO is tackling it.
My job day to day over the years has really shifted to being like the chief education officer of Core and really Bitcoin generally, because the biggest barrier that exists in all of Bitcoin today, whether it's on chain or just standard on Bitcoin L1 or in a financial wrapper like an ETF or an ETP, is just education. Like we think that so many people are familiar with it, but in reality, they're not. And if you think about anything after Bitcoin, the amount of understanding is so limited. Like many people think it's like Bitcoin, Ethereum, and then Solana, and they're all like bunched together. And it's like Bitcoin, 5 orders of magnitude to the side Ethereum, another 3 orders of magnitude to the side Solana, and then everything else. Like it's not even close in terms of the understanding for the vast majority of people, for Wall Street, for all these different groups. So I spend a lot of time trying to educate different people. And then on top of that, I think the way that we have architected Core system is truly unique because the approach that we've taken has meant to not be a one size fits all. So when people think of Bitcoiners, they think of it as this homogenous group. Everybody thinks the same, everybody acts the same, but in reality, it's not true. They've got very different understanding, very different risk thresholds, yield desires, you name it. So how we think about it is a large amount of people that don't want to do anything with their Bitcoin today. And that's okay. Then you've got another group of people that's fairly large that might be ready for Bitcoin staking. They want passive yield. They don't want to come on chain yet. That's another group. Then the middle group is, I want a dual stake. I want DeFi yields, but I'm not really ready to come into DeFi. And then finally, you have like full-blown Bitcoin DeFi. But each of those are very different use cases. They all need to be marketed to, educated differently. And our job is to try to move people from one rung of that ladder over to the next as time goes on. But if you try to force people to do things they're not comfortable with, or they're not ready yet, or they don't trust, you burn that relationship. And we've gone to great lengths to try to build products and services that meet people where they're at today, and then also have that next step in the value chain for whenever they're ready. And that can be size determinant, it can be yield determinant, it can be a variety of different functions. But it's so important to have that sort of care in terms of the architecture of the system, because the reality is so many of the other coin scaling solutions, they might be really good at one use case, and that's awesome, but they can't serve the whole group. And it's really hard to go serve the whole group. And that's part of what I'm so proud of the core team for being able to do. But that's also why you can tell that this is a long-term project for us, because we're not trying to rush people. We're trying to meet people where they're at and then educate them and bring them along the path so they can get the most out of their Bitcoin.
Fantastic. 2 quick rapid fire questions as we wrap up our time here today. Maybe one question, not so much rapid fire, but would love to get your thoughts there. You've said CoreDAO is at 1% of its mission to unlock Bitcoin's $2 trillion potential. What's the next big milestone Core is working towards? And how would it redefine what's possible for Bitcoin in institutional or retail markets? And then the last question is, what else in crypto excites you? Would love to know. You're an OG in the space and a very respected member of the Bitcoin ecosystem. So I'd like to take you outside of Bitcoin and hear what else in crypto and outside Bitcoin you enjoy or think is promising.
So, and this kind of goes into the 1% of the mission piece at the preamble. So I firmly believe that Bitcoin is the purest form of money that we will ever see, and that everyone in the world should have Bitcoin. And like, that is a hill I will die on. And if you think about Bitcoin L1 today, that's just not possible. Not only is it too expensive, but it also just the UTXO model doesn't scale well enough for that. It's not possible for 8 billion people to have a UTXO. So when you think about, that's exactly why Core exists. We needed to add not only utility, but scalability to Bitcoin. In the world that we're trying to bring about on the retail side goes back all the way to 2013, and why I'm so frustrated that we didn't build an alternative traditional financial system yet. But how I see this playing out is Bitcoin becomes a savings account for the billions of people that are unbanked or underbanked throughout the world. And it's a perfect savings account. It's a perfect collateral asset. You don't need to trust it. People are willing to accept it, whether they're small merchants or they're potentially banks in the future, or like people that are selling houses, you name it. You can transact in Bitcoin today because it's this neutral store of value. And how I see this all playing out is Bitcoin becomes your savings account. It's even better if it's yield bearing, but doesn't necessarily need to be. But now you have savings. We have yield accruing on top of it. And then we need to pay your bills. You get paid in stables, or you borrow a Bitcoin for stables. You earn it into more Bitcoin. But that's how you actually build an alternative traditional financial system. That's actually how you can have a trustless trust. And I think these will look like Bitcoin neobanks, but it's a much similar model that scales incredibly well. And I think that was part of the original vision. It was, this is how you actually transact without trust in a non-sovereign way at scale. And that's one of the things that we're really trying to push forward. We're finishing this off with stable coins, as well as the neobank and things. But I'm super bullish on that. It's not going to happen overnight. But that's such an important piece of our mission, is to try to get Bitcoin in the hands of everyone that we possibly can. On the institutional side, I think this, for all the reasons that I mentioned prior, in terms of just my excitement of all the Wall Streetification of Bitcoin, is we need to figure out, how do we keep the decentralized tenets of Bitcoin part of this next wave of the institutionalization? So as of now, we have the Bitcoin ETFs, all that's super exciting. There's so many more products that are going to come. And there's going to be structured products, there'll be derivatives, there's going to be Bitcoin bonds, like you name it. There's going to be so many things that get created over the next several years. And we want crypto folks to have a seat at the table. And someone that I respect tremendously about this is Caitlin Long from Custodia Bank, who's always been talking about rehypothecation and how so many of these bad things are going to come. The more crypto people that we can have involved in this, the better these products can be, and hopefully the safer that they can be. And I think if we do this correctly, this can be one of the dominant assets of the entire financial system. The derivatives rule of thumb is at least 10x spot. So I'm long on Bitcoin to at least the market cap of gold, which is ripping at the moment. But if it's to the market cap of gold, let's say it's like 20, 25, 22 trillion, something like that. Now you get 10x, dropping like potentially hundreds of trillion. Like you're talking just these enormous numbers. So it's important to have crypto people that are helping to shape that. And that's how we can also help to invert that financial system concept by making Bitcoin one of the centerpieces of it. So those are 10-year plus journeys, right? That will not happen overnight, but it's what gets me super excited every day to come to work and to keep working on Core and pushing Bitcoin forward. In terms of what also gets me excited about crypto in general, I'm super bullish on stablecoins. And I've been bullish on stablecoins for a long time, going back to my time at Coinbase. Stablecoins are like, there's been two product market fits in crypto. One has been like speculation and gambling, and the other is stablecoins. And it's because for several billion people around the world, just being able to hold a US dollar is a 10 to 100x better solution than just holding their local currency. And that's, again, where crypto is needed. That's where crypto provides so much value. And I've been spending a lot of time with the Stable Act, the Genius Act in the US, trying to understand how these different assets will continue to evolve over time. But that gets me really excited. Yeah, it might not be the flashiest thing that's going on in crypto, but it is one of the most exciting and most impactful. And I believe that crypto is one of the best forces for good in the entire world. And whatever I can do to go help bring that forward is what I want to spend my career on.
That's fantastic. I think that's one of the strongest use cases out there for, if not the strongest use case out there for crypto. It's stable coins. We're very much aligned there. It's something I'm really passionate about. But Rich, this has been amazing, highly educative, and definitely one that I just really appreciate, just given the innovation that CoreDAO not only brings to Bitcoin, but just to the overall crypto ecosystem. So I just want to thank you for your time and for helping break down the core concepts of what Core is and what it's doing for the space today. Hopefully we'll have you back soon in the show, because it'd be great to see how a lot of what you've shared with us has impacted over the next couple of months, quite frankly, because things are moving really fast here. So thanks for being on the show. Appreciate it.
Thanks for having me, Benga. Chat soon.
Cheers.
Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much, and have a good one.